When a sale date is on your calendar, everything suddenly feels final. The letters sound harsher, the phone calls feel more urgent, and most homeowners hear the same message over and over again. You're out of time. What makes this moment especially dangerous isn't just the timeline. It's the assumptions people make when fear fills in the gaps. One of the biggest assumptions is that once a sale date is set, loan modifications are no longer possible. And that belief alone causes people to stop asking questions, stop submitting documents, or stop responding altogether. So today, we're talking about what really happens with loan modifications after a sale date is set. Not the version people repeat online, not lender marketing language, what actually happens here in Arizona. If you're new here, I'm Hope. This is the Hope Podcast. Every week, I walk homeowners through foreclosure timelines, trustee sales, and real options so you can understand what's happening and make decisions without panic. One of the biggest misconceptions I hear is that once a sale date is set, a loan modification is off the table. That's simply not true. In Arizona, lenders still review loan modification requests even with a sale date on the calendar. What changes is not eligibility, it's tolerance. The file has to be clean, complete, and timely. Most homeowners lose momentum not because the option disappeared, but because they assumed it did. That word tolerance matters more than most people realize. Once a sale date exists, lenders stop being flexible. They're no longer managing a theoretical risk, they're managing a scheduled event. And that's why the next issue quietly derails so many loan modification attempts. When a lender says your loan modification file is incomplete, they're not speaking in code. It usually means one document is missing, outdated, inconsistent, or improperly signed. After a sale date is set, incomplete files don't move forward. They get sidelined. The bank isn't evaluating effort, they're evaluating accuracy. At this stage, details don't slow things down. Missing details do. From the homeowner's side, this feels frustrating. You've explained your situation. You've uploaded documents. You've followed up. But once a sale date is on the calendar, effort doesn't carry weight. Alignment does. Another place people lose momentum is by focusing on the part of the story that feels most personal, but matters least to the decision. Hardship explanations feel important, but they don't approve loan modifications. What lenders actually focus on is forward-looking income. They want to see stability, consistency, and the ability to sustain a modified payment long-term. Emotional explanations help context, but numbers make decisions. If the income picture isn't clear and defensible, the file struggles, regardless of how real the hardship is. Your hardship explains how you got here. Income determines whether a modification works going forward. Those are two separate conversations, and lenders treat them that way. Now, let's talk about timing, because this is where good intentions can actually hurt outcomes. Once a sale date is set, timing becomes everything. Submit too late, and the file may never reach full review. Submit too early without the right documentation, and you create delays that cost valuable time. There is a narrow window where things move efficiently. Understanding that window and working inside it often determines whether the lender engages or the file quietly stalls. This is why homeowners often say, "I did everything right and nothing happened." They weren't wrong. They were just out of sync with how the process actually moves. Another thing I hear all the time is confusion after a denial. Many homeowners are shocked when a loan modification is denied, even though the income appears to qualify. That's because lenders look at more than affordability. They review occupancy, prior modification history, document consistency, and responsiveness during the process. A denial doesn't always mean the option is gone. It often means something in the file didn't align the way the lender needed it to. A denial isn't always the end, but it is information. And sometimes, while a file is under review, something happens that gives homeowners a sense of relief, but also creates new questions. If a trustee sale is postponed while a loan modification is under review, that's typically a positive sign. It means the lender believes the file is worth continuing, but a postponement is not approval. It's time, and how that time is used matters. Staying responsive, submitting updates quickly, and avoiding missteps directly impacts whether the review moves forward or stops. A postponement is breathing room, not a finish line. And that leads to the part most people don't want to hear, but need to understand clearly. After a sale date is on the calendar, loan modifications become far less forgiving. Small mistakes carry bigger consequences. That's why many homeowners struggle doing this alone. Understanding what lenders look for, how timelines actually function, and how to communicate clearly can prevent avoidable denials. At this stage, success is driven by precision and clarity, not panic. If you have a sale date right now, here's the takeaway. You're not automatically out of options, but you are out of room for guessing. At the Offer Company, this is the exact stage where we help Arizona homeowners understand what's realistic, what's still possible, and how to avoid mistakes that quietly cost time or opportunity. If you want to talk through your situation, there's no cost and no obligation. Sometimes clarity alone changes everything. And if this episode helped you, make sure to like and subscribe to the Hope Podcast so you get updates when new episodes come out. Each week, we break down another piece of this process so you don't have to figure it out on your own. Thanks for listening. I'll talk to you in the next episode.